Hey, what's up, good people? You guys know what to do. Follow the prompter below by hitting the like, subscribe, and notification bell. Make sure that if you are subscribed, that you're not unsubscribing. So make sure it's checked, okay? Please, everybody, let's do a mic check today. Make sure you don't fall for any spam in the comment section. Anything I say is not a suggestion for you buy, hold, or sell. The Fed has spoken. And at the time of recording this, the market is still selling off. Dow is down over 900 points. By the last 10 minutes of closing bell, there's usually a sell-off on Friday. Fed usually speaks on the FOMC meetings on Wednesday. And then the information came out like it did this morning. So the Fed spoke. The market kind of was going down while he was speaking, and it just kind of leveled off. Like I always said, after the Fed speaks, the market needs time to absorb the information that was given. And that's what the market did. It absorbed the information. The Fed was very hawkish in his speech, and the market began to further sell off. And so this is what's going on right now with the market. And there's a lot of questions, right? I have been constant in saying, people are like, we missed the bottom. We missed the bottom. No, we haven't. I believe the S&P is going to revisit the 3790 area. I believe that we will minimally revisit the June lows. And what I'm continually doing is my dollar cost average. Now, the other day when the market tanked, I took I was behind about a month or so, and I took half of that and I bought it the other day, my $5 a day. And then today I'm buying my other half. Now, if you think that the market has sold off too much, which it could have, if you think that this is a knee-jerk reaction, if you're doing the $5 a day challenge and if you're doing it with Webull, then you can just go ahead and dollar cost average all the next month to be ahead of the game. You do what suits you and with your purchases. But if you think that this is just the beginning and we're heading to reality, then I would just not go all in. Either way it goes, I'm personally not buying anything heavy. So people were asking, are you buying before the market? And I said no, right? And I'm glad I didn't, because only time tells on situations like this. No one had a crystal ball to see what the Fed was going to say in a Jackson Hole meeting today. So I'm remaining consistent in my outlook for this year. And I'm also remaining consistent with my plan. Please leave me a comment on what your investing plan is during this further downturn of the market. I've been saying it, and I'm going to keep saying it. The biggest threat to the market now is the Fed, the Fed, the Fed, right? So he came out very hawkish, but listen to this. Sometimes he has to be hawkish in his talk, and let's see what the data says. As a matter of fact, I want you guys to listen to this exchange because it's very important, and then we'll discuss from there.
Since you're here, this was a hawkish speech, full stop. The Fed chair said his message was, quote, going to be more direct. Restoring price stability will take some time by using our tools forcefully. He said another, quote, unusually large increase could be appropriate at the next meeting. Decision will be dependent on incoming data. He cited Paul Volcker. He said we must keep at it until the job is done. Said there's going to be some pain as a result. Leisman pointing out today that, in fact, shows how resolute the Fed is going to be. And with all of that, you say what?
So first off, I say this is not a surprise. OK, he wanted to take off the table, Scott, the idea that rate cuts were coming anytime soon. That idea should not have been on the table. Everybody for the last month plus has been saying that, look, we're going to raise above restrictive. Everybody in the Fed governance committee has been saying we're going to raise above restrictive levels and then we're going to stay there. OK, so that should not have been a surprise. What he said is that he's going to be data dependent. 1 month is not enough. Again, that should not have been surprising.
Did he really say he was going to be data dependent?
That's what I heard. What he said, and I listened. listened, he said, I want to see the totality of data before making the decision. Those were more or less his exact words. The totality of data was a phrase that he used.
I feel like they're going to put a sledgehammer on the economy, Steve Weiss, and then they may be data dependent on what happens next. But this was about as hawkish as you've ever heard this Fed chair, I thought.
Yeah, frankly, I've never seen a market down almost 3% because it expected something. So I challenge that the market's not surprised by it, that everybody expected such a hawkish statement by Powell. Some did, for sure, but a lot didn't. And take a look at where it is. So I think the delusional aspect of what some people are saying really has to stop. They have to think, be a little introspective, and realize that it's been free money, not just in the U.S., but around the world for the longest period ever. There's no time like this in history. None, period. End of story. And so everybody got addicted. Companies, investors, meme players, apes got addicted to free money. And turning that, getting off that addiction like any addiction is painful, a lot of bumps in the road, and it's not a one-way trip. So
he said painful.
Look, what I'd say
he said it was going to be painful.
Yeah.
So he did. The Fed said it's going to be painful. That was extremely hawkish. And it is one of the things that has the Fed is doing. Now, there's a part of me that believes that he was so hawkish on purpose because it affects the market, And so, but there, on the other hand, there are signs that the hawkish tone of the Fed is already working in the market. Interest rates, the housing market has come to a screeching halt. To get a 30-year fix now is 5.5 when, 12 months ago, you could have got 2.7. I said it this morning. So if you have a house that is $250,000, your mortgage is an extra $300 now per month. And so, but what does that do? It kills demand. So there's a lot going on right now. For those of us that are cashed up, we welcome days like this. We always say here at the family, we ain't scared, we prepared, right? You got to use the ain't in there. So I will tell you guys, and I'm going to continue to say this as unpopular as it may sound to some people. If you fear that you have missed the bottom, you have not. I'm going to leave a video here again that shows a safety zone of where I think you could start buying and to start buying heavier than dollar cost averaging. That's what I'm going to do. I'm going to leave that video here. If you have not watched it, I implore you to watch it. I have nothing to gain or lose by it. You can't argue with the data. You can't argue with the facts. If you've watched it and you've forgotten these key numbers, I want you to watch this video again. I believe personally that it will be very helpful for your trading for the rest of this year. And I believe we'll have a break. I will consistently say that we're in a soft recession and the hard recession is yet to come. But that is nothing to be fearful of because there's a lot of opportunity. We look for the opportunity, right? And there's a saying, there's another gentleman that I put on my Instagram, that link will be below also, that I put on my Instagram of a gentleman that said something I've been saying, but he said it better than I did. And that is, if you want to live an easy life, do what's hard now. If you want to live a difficult life, do what's easy now. So buying red is difficult, but it's going to make you money in the long run. And how long should you buy? Through the entire recession. So whatever amount of money you have, cut it up. Just take what you get paid, whenever you get paid, how often you get paid, and put what you can afford away into something that you could purchase. If you don't have a trading platform, try using the Webull, because the Webull, you could do 5 stock, dollar cost average, whatever your 5 is, and go from there. But also in Moomoo, and there's links for both beneath, I am going to be buying some more. I'll probably buy just a little bit at close, just before closing bell. I'm probably going to wait again until Monday. I'm going to be adding to some Alta positions, ULTA. I'm going to be buying a little GORO, which is gold. I'm going to wait until it comes back down to 175-ish. And my strong buy is 170. But now I'm like 175-ish, buying a little bit. And then energy, I'm going to wait. I'm going to wait to start making energy purchases. And then consumables like Walgreens, Walmart, Target. Those type of plays we don't want to load up on now. Actually, in the middle of the recession is when you start buying those type of plays, for what I see. All right, good people. So that's what we're going to do. And all of those plays, the gold, you can literally get in a gold ETF, the Alta, the energy, those type of plays. If you're following me, we're doing that in our Moomoo app. All right, we're doing that with Moomoo. So make sure that if you've downloaded it, make sure you get it funded today. And those promotions are running out both on Webull and with Moomoo. Make sure you check out the link below. Hey, good people, we're going to continue to monitor this, and I'm going to bring you as much information as I can to help you with your trading journey. All right. We'll see you. Have a blessed weekend. Live, love, laugh, and learn.